Um, Good afternoon, Satya. Let's come to the Ichimuko trading system, methods and benefits. Most of the people try to ask me, sir, which indicator is better or how do we verify it? There are many things. But Ichimuku stands out in among all of the indicators or all of the charting methods. Basically, you can say charting methods. Now, why do I say that? What are the progressive methods in it so that you can also take a benefit of it? See, I will go back to the replay and I will try to show you what exactly I mean before this. Okay, so now I'm going to select displays. I'm going to select, one second, what happened? Wait a second, please. Replay mode, yes, and I'm going to use this. Okay, why it is not coming? 1 second, please. Sorry for that. Replay mode is not available for weekly and monthly. I didn't know that, so I went for the weekly. I thought, okay, I can teach you the weekly version. But no problem. I can teach you the daily version. So let me go to the replay again and come back here and let me select this one. Okay, here I will select. See, in this is what happened during the budget, right? This is what happened. Entire budget went down. But when it came down and closed the year, you see the Chicago span. I believe every one of you aware of the Ichimuku indicator. So I am explaining the tools directly it can be used. This is a 26 period previous price action. This line represents 26 period previous price action. This line represents 26 period ahead of this price action and a combination of this price action. Okay, and this line represents 26 period current price action, and this blue line represents 9 period current price action, and the cloud basically represents future. Cloud basically represents what are you looking in the future, that is future volatility. It indicates future volatility. If you don't know, please go to the Ichimoku this thing and you can look into it. Now when we are looking this, it has bounced from here and it is going upward direction. So let's see. Okay, then again it bounced, again it bounced, again it made, again it made. Now it is pausing. The distance between 9 and 26, whenever it increases to as more than 3 standard deviation, whenever it increases more than 3 standard deviation, market enters in a sideways. Okay, this is first. How do you understand the standard deviation? You can see over here. Whenever the distance between these two is significantly increased, it entered in a sideways. But in this case, it has entered. It has more than the 3 standard deviation. Here it is more than 2 standard deviation. The standard deviations, even standard deviation are calculated between these two. That is right now. Let us not go to that. Whenever it makes such things, we have a fractal indicator here. Fractal basically suggests that if the higher low is breached at this gap, okay, if the higher low is breached, the market might enter into a correction mode. So let's see. Let's follow the higher low. So higher low is breached. Again, higher low is breached, did not close below, it made a one more new high. This we call it, typically we call this, once the higher low is breached, we take an exit. This new high and failure to make a new higher close, because this is rejected and this is doji, and significantly explains that market is vulnerable for the reversal. That means any bearish candle on the daily, you can look for a short sell, right? So let's see. Second doji, one more. Yes, 1 second. Excuse me. This is a sign of bearish. The new higher high and higher low is made, then it is reversed completely, explaining the momentum volatility is more than 3 standard deviation. It is very high. So the moment when you get a reversal over here, the price action should come into a picture and say, okay, it has ignored. Let's see, where are we going now? To forecast a target, you need a target. Where to fix the target? Now the first target is this Chicago span. It will always come and tag the price action. The price action in the sense, now in this case, I will bring this, I will keep somewhere here. Okay, 23,728. In this case, it is still not happened, right? I will show you. It made a lower fractal, it broke up previous lower lows, it made a lower fractal to 26 period, and it bounced from 26 period, and it made a rejection again at the same high. This is where it gets interesting. See, it gapped down. Yes, of course, it gapped down. Here it made a new high. In the Chicago span, it made a new high, closing prices, and it straight away fell to where? Can you see? Can you understand this simple, meaningful explanation? Where do this fell now? It has fell to the same price action, right? Correct? So from this point of intersection, we know it has dropped to a price. The Chicago span has dropped to the first time it has dropped. After from this, first time it has dropped. So we have one more pullback now. So see, here it gets more interesting. All these are very weak sign, and it gaps down, breaking this low, and then it gaps down. So this is a huge gap, my friends. That's a huge gap. Next, it starts both the lines are in a single post. Now 9 period broke the downward end. That means we are getting one more low. We are getting one more low before we see an equal high. Okay, so let's see. Okay, it went up. So we saw the equal high, and it will make the same thing now. Once it makes a new high, it will come down because the volatility has been reduced here. At this point, the volatility is very deviation, standard deviation is very low, that it is a neck. It is called a chicken neck. You can call it as a chicken neck. Sometimes they sharply break down. Sometimes these setups will sharply break down, not go up. Now the Chicago span has made a new high, price has made a new high, and it is very small. This indicates that future standard deviation might not be more. So again any reversal we are going short. Okay, it extended, but it made a new reversal over here. Now here is a key point. You already have a once price tagged in the Chicago span, right? सही है, ठीक है. Then it came and tagged one more time. सही है. This time it will cross below the price. This time it will cross below the price. So I'm just giving you a small idea that using only one tool out of Ichimuko, you have so much knowledge to gain. Rest other things like price action, MACD has not come here. That's okay. That has not come. I don't know. Let me put the MACD. MACD is there. Okay. So in the MACD you can see now. Yeah. This came and tagged once. It came and tagged twice. When it tagged, and now it is, this has turned, and the MACD line also has turned. Okay. And if you see this peak and this peak, there is a divergence in this. That is what I told you. Once it tags here, the second tags here, third time it comes below this price action. So we have, when we sell here, we are looking for somewhere low of the cloud. This is how basically the Ichimuko is traded. So, okay, we are now looking for the low of the cloud. It can pull back, yes, it can pull back, but very unlikely it will go below the cloud. Now this has made a below the cloud. So what did I say? That it will now pull back inside the price action of this. So this line is previous 26 period previous price action. Okay, closing prices. So this is how you can use. See, I told you it has come below the cloud. It has come below the cloud, right? From this to this is on a great money. How much? Let's see. From this to this is around about 1400 points. Fine. 30-40 points here and there, it's fine. It's fine always, because we are looking into on a daily time frame perspective. When the cloud came below here, you can also notice the future cloud is bearish now. So any pullback, the pullback will be usually up to this green, up to this green. See how the cloud also basically, future cloud also basically helps you to understand support and resistance, right? Or something you believe in. Okay, 1 second. This 26 period broke below the cloud, indicating that the retest of future cloud might not be nearby, or might be, it might bounce from this place to down of the cloud. That means bottom of the cloud can be retested. So there are 2 or 3 patterns only, not much more than that. There are 2 or 3 patterns. So you continue to see when this rejects from 9 period, right? When break up the fractal, you continue to sell, reject from 9 period, break up the fractal, you continue to trial your stop, one more high, break up the fractal, you continue to push your trailing stops, unless you have break of previous fractal high and close above. That is your stop. That is your stop. Now it is going towards, yeah. So it retested the lower cloud now. It can go up to this level. See, I'm not even explaining you the things. And in this, you can see this will come back and tag somewhere here. and then it will bounce from there. Okay, people have to have some sort of understanding before they even make a decisions. Okay, it's done deal. It has come and then it turned its face, so it is coming down. So this basically, when this happened, I mean when these three bars are happened, this basically came to a zero. This indication a momentum indication, start of the new momentum indication. So the new momentum has started now. Okay. At some point, when every low is retested here, this low is retested, this low is retested, probably this low will be retested for 1, and then we can expect it to go back and tag somewhere here or this green. The Ichimuko is so powerful that you feel it that you already know what's going to happen, but only necessity is that you need to practice it. Okay, retest is done. Now it might go up or it might continue to drop until the momentum is complete. Now one more important thing is, when this now you saw that it has touched once, it has touched twice, then it came below. Now it has touched below, it has made one interruption, the second interruption has been made, the third interruption will be just here only, and then it will fell down and then it will interrupt again. Okay, the interruption of Chicago span. So when Chicago span makes a new low here, this one, when this one breaks its previous low, not necessarily this one, this can go down and make an hammer also. Okay, that time you have to look for a reversal. Now what happened here? Can you please see? This has made a new low. Now this is ready for the reversal. Out of this entire drop, you may get a 50% chance. This is a 50% Fibonacci retracement. This is a 76 or 78% Fibonacci relationship, and this peak is a 100% relationship. Okay, but at least you are getting 50 or 62.5. You get this? When you know that you are getting this kind of information just because of one indicator, and when you know when this was happening and this is below the zero line and it reversed below the zero line, that means it's one more short down. So these facilities must be understood on the weekly basis. I am unable to show you on the weekly because this replay doesn't work on the weekly. Anyway, doesn't matter. Now it's a reversal. Yes, it's a reversal. We can see that. Why we can see that? You can see here that it made a new low. Almost there is a divergence. It made a crossover below the things, and it will likely to come here and then pause here, then go up. Okay, you can witness that now. So there is always a first time cloud rejection will take place. Whenever it comes to a cloud, it gets rejected. What happens when cloud comes? Basically, it's a very speed reaction. This reaction is a very speed reaction, because you can see there is a gap, 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 there is a gap. So this is a speed reaction. So this you need to wait for one zigzag or a flag pattern to cool down. But when it hits the upper cloud, you see it's already crossed over here. Future is crossed over. So you need to wait for it. People don't wait. That is the reason they lose the money. It's not that people are ignorant. No, people don't wait. Now it is ready to bounce outside. Now you can see this momentum, both the lines are above the zero line, and you can expect this to reverse from here and start making upside move. It's above the cloud, but Chicago span is still below the cloud. So what happens here, that Chicago span this much distance, the price has to come across this. That is the reason I always keep saying you need to break the first fractal. You need to break the first fractal. Above the cloud, you need to break the first fractal. Fractals are very important signatures of the market behavior. If you don't understand, go and check the Bill Williams videos. They are excellently explained. Now, now the market is bullish. It is going up to this or up to this. I don't know where it go. But you have, these are still inside the cloud. That is TK. Dickinson and Kijunsen both are inside the cloud. That means they will just come out and start going flat here. By that time, it will just come out and come and bounce from above the cloud. When it bounces from above the cloud, the price will come and tag the TK lines and then bounce it. You will witness now. See? See? This is Dickinson and this is Kijunsen. The Dickinson will give a flat. Kijunsen is also entering into flat, and this Chicago span is entering near the cloud, and we need a bounce, right? So don't rush when you want to make yourself a successful trader. Don't rush for unnecessary this thing. We know for sure. Okay, this is a cheating. They came here. This came here. This broke the law of this actually, and then it bounced. It's called cheating. At this moment, the Tinkensen, the Kijunsen also turned green here, turned upside. This turned upside, right? So this is called cheating. Okay, business is a cheating. You can't help for it. Now it will go. It might test this 25,656. So this is how we continuously check the Ichimuko. Now I just explained to you how it works. Okay. Now I will give some analysis on Nifty. It's heading towards 25,650. Or it might come back also. No, don't know. Too much crowd behavior can be seen in the indices. Okay, so now it hit the target. Did it hit the target, my friends? Having a very tool with us, having a very powerful tool with us, knowing how it works, it should be an advantage for you to take advantage and use it. Okay, so now I will cut it down, and now what I will do is I will go to the weekly, and in the weekly you can see it has come down here. In the weekly it changes the poster, then it made A, B and C, then it made a 1, 2, 3. Now it will, now this is very likely it is still has to cross below, and the Chicago span has just crossed below here. So we are looking for a small pullback up to this pullback 20. I will give you 1 second where we are looking. Let me see where we are looking. We are looking somewhere here. This is what we are looking, 23,730, or in a slightly upper level is 23,800. So this is what we are looking in this. Now you also have an advantage when you go for the custom time frame. For example, 3 days. we go with the 3 days custom time frame and we know how it behaves. Okay, so in the the last one is 25th of March. I mean 25th, 26th, 27th. Yeah. So last one is this one. Now we need a fresh one. So fresh one, you can see it can go up to this high 23,835, or it can go up to this high. But when we go with the 3 days this thing, the it is already below and this momentum has already started here. So the only way we can make money is to push this, is to understand this how it works. So on the daily, when you see it is Tinkinson, Kijunsen. It is exactly at the Kijunsen high. The Kijunsen is one of the this thing. It can rise here, but it won't interact with the price here. Then it will come down. Okay, so that is how we think it should work. On the lower time frame, let's see on the lower time frame. So what's happening is it has still not crossed the this thing. So but it is here. Suppose what happens if in case it closes above here, then this will close green, and usually it goes to this level 23,800. So our forecast is we need to wait for this to retest and fail. We need to wait for this to retest. Going long on this part is bad idea, because I'll tell you how. I will go to the monthly. You can see on the monthly, where are we? Monthly, we are about to touch the price. This Chicago span is about to touch the price. So any pullback here will only go down and then make a move up. So this is the flat pattern on the monthly. So once that is done, we are going up. Okay. So once this is retested, 20,000, 21,500 something, once it retested, we are going upside, my friends. Okay. Yes, we don't have a divergence on the monthly, but we do have a crossover here. But that crossover does not significantly explain, because the market is in sideways. So when the market is in sideways, usually the MACD crossovers are ignored. Ignored not as ignored as in a technical aspect, but they trail the stop to take profit and make things easy. Okay, that's what we look into it. You can look for the weekly, you can look for the 2 weeks also. If you are interested, you can look for 2 weeks. In 2 week you can look for this to, it is already crossed below, it has interacted twice, it is already crossed below, it is going to come down. On a 15-minute time frame, what are you looking for? On a 15-minute time frame, buying is a very bad idea. That's what I'm trying to say again and again. Buying is a bad idea. It can drop to equal low. It can drop to the equal low, and then it can start moving upside. Still, we are looking for an upside move. If it drops to equal low, we are still looking for a slightly higher than this previous 23,400. Okay, understand this? All right. If you are more interested on the Ichimuko and its benefits, you can join the course, and you can join course the indicator you like to learn and you like to make a money, and it will take time to learn, because learning curve take time. It won't come easy. Okay. All right then. Thank you very much. Bye.